Welcome to another Earnings All-Stars video. This week, we're kicking off earnings season with the big banks, but I'm not going to cover them this week. We all know what's going on with the banks, but I am going to cover two of the hottest stocks that are reporting this week. One used to be in the famous FANG man, and FANG, no, it got kicked out of FANG. It was never in FANG. Sorry, it went to FANG man. And then it got kicked out of the Magnificent Seven over the last couple of years. Will it get inserted back into whatever the next mantra is with these hot stocks? We'll see. And I brought another company that you might not have on your radar, but it's actually outperforming the former FANG man stock over the last 5 years. What are these two great hot stocks? Let's dive right in. Okay, the first one, maybe you have guessed, is Cintas, actually. This is the company that I feel like most of you don't know what's going on with it. It is the uniform company. And look at this chart. I put up the price consensus and earnings surprise chart because right now, this is one of my favorite charts to really see who has the growth plus who is an earnings all-star. Obviously, no misses. Look at all these green arrows. No misses. Some of these might be meets or just barely beating. Looks like they're mostly just barely beating, but you could get a little green arrow if they met as well. But a meet is the same thing as keeping your track record alive. So therefore, we do have the 5-year track record here with Cintas, but look at the explosion in the shares over 2023, 2024. And why is that? Well, look at the earnings up and to the right, up and to the right, up and to the right for 2026. Now, we did finally get a sell-off here at the end of 2024. Then they announced they were buying UniFirst, one of their competitors on the uniform side. And that's going to create even a bigger juggernaut here. And then the shares have been slowly getting back to those highs, pulled back a little bit off of them here. Year to date, up 19.1% now. But, the shares aren't cheap. This is the thing with Cintas, and I've been talking about it for a couple of years. They haven't been cheap, even going all the way back here. And even with the earnings growth, the nice earnings growth we're seeing. So here for 2025, expected to see 15.8% earnings growth. And then 2026, another 10.7. Cintas is on the fiscal year, so they're about to report their fourth quarter. So we are going to go into this 2026 line pretty quick here. But as you can see, the nice double-digit earnings gain is expected again. But the PE on Cintas is now 44.3. 44.3, that's pretty stretched for a company, even with the double-digit earnings growth. But I'm not betting against it. I've been talking about it being stretched for years now. So let's just keep going with it being stretched, right? But we'll see. Do they give any guidance for next fiscal year here as they're going about to report the fourth quarter, as I said? And then are they going to be able to look at even further down? We'll see. But Cintas, CTAS, one of the big ones to watch this week. It's reporting on the same day as the other stock, the one that was kicked out of the FANG man, out of it to go into Magnificent Seven, which it never did, Netflix. It's number 2 now. And look at this chart, very similar in the last couple of years. But as you can see, the reason it got kicked out was, look at this performance in here. It was mostly in this narrow trading range until about a year ago or so here in 2024, when the stock finally took off and is making another set of new all-time highs. But look at its earnings surprise track record, 5 beats in a row, just these 2 misses since 2021. So that's a great track record there. And again, look at the earnings side of things. 2025 earnings expected to be up 28.1%. And then this light blue line right there is 2026, 21.9% again. But look, because they're not on the fiscal year, 2027 is now appearing on here, and they are bullish about 2027 as well, with another, looks like double-digit earnings gain expected again. So this is what investors like to see with Netflix. PE isn't cheap, but when has it ever been with Netflix? I remember back in the days when it was trading at 80, 90 times. Now it's trading at 49 times. So just as expensive as Cintas, but we do have a better growth trajectory here with Netflix, at least over the next couple of years. Now, I wanted to show you real quick the surprise you might have if you are just looking at the longer term trends with both of these companies. I'm putting in Netflix first just to kind of see, because I do want to compare them. Putting in Cintas, and you can see now this, it usually gives you a year to date, and it does look like it's, there's the year to date. So Cintas, not quite as good a performer. I thought it was up 19. Well, maybe it's down a little bit here, 17.9%. That's still outperforming the S&P 500 year to date. Netflix really soaring here back to kind of its old ways when it was the dominant stock of the 2010s in through 2020. It was one of the top performing stocks of that decade. But when you scroll out and look at the 5-year, this is when you really get an idea of how Netflix has kind of been lagging. Still a great performance at 156% for Netflix. But Cintas easily outperforming Netflix there at 206%. That's more than double the S&P 500 for the same period. So both of these outperforming the S&P 500. You can't really complain about it if you're an investor, but I urge people to look beyond the Fang Man, the Magnificent Seven, because there are some of these other companies that have been performing really well in the last number of years, breaking out to new highs. They might not be cheap, like Cintas is not cheap, but we still have nice double-digit earnings growth expected. We have great earnings surprise track records, and these stocks are kind of not hidden gems because someone is in them since they are still breaking out, but a way to look beyond just the high growth tech names into some of these other really well-run companies. So these are the two hottest stocks this week. As earnings season begins, we do have some hot banks, believe it or not, reporting, like JP Morgan. We're going to get Citigroup, Bank of America, which have been good performers this year. And we'll see what the banks have to say. Watch those regional banks. I've talked about them on my podcast recently on the Value Investor Podcast, which you can get on our podcast page on YouTube. But still, some of these other companies, just a bit hotter here. So be sure to tune in all earnings season long because we're just getting started. Already we have these hot earnings charts and on the price and consensus part of the story as well. And we're going to be getting more of these Mag 7s right away here in July. So be sure to get all of our Earnings All-Stars videos. They will be posted on Twitter. We're going to have them on my Twitter, also Zacks.com Twitter. And I'll be posting more charts than just what these two are all throughout earnings season as well on my X account and Stock Twits. And just about anywhere you can find anything about stocks, you can find us. Be sure to get us on YouTube and all of our videos, including top stock picks of the week there. Lots of stock names going to be thrown at you the next couple of weeks. This is the fun time. So buckle up, get ready, and join me next week for some more stocks.